Yes, your favorite liberal government has made changes to the capital gains taxes, how they're calculated. In this video, I want to explain to you exactly what those changes are, how they affect you, how to calculate the changes, and how to avoid as much pain as possible into the future when you're dealing with your asset base, and what opportunities there are. And yes, there are opportunities when there are changes. Let's answer an important question right away. Do any of the capital gains tax changes that just happened affect your personal home and the personal home tax exemption? The answer is no. Breathe a sigh of relief. Your primary home is not affected at all. Okay? What are capital gains? Capital gain is the difference between an asset's cost, what you paid for it, and what you sold it for. An asset could be an investment property, a stock, mutual fund, anything outside your personal home. Example, Mary purchases a rental property for $500,000 and then sells it 2 years later for $700,000. She has a capital gain of $200,000, the difference between what she sold it for and what she bought it for. There is a deeper calculation here to calculate capital gains and exactly what it is. I'm going to put a link to a video here. It's a 10-minute video where I go into super detail with examples of how to actually calculate this with calculators and everything. This is not the place for it. I want to talk about the changes and how they affect you here. Okay, so how are capital gains taxed and what exactly is changing? Currently, only 50% of the capital gains are taxable. Since Mary sold a rental property for $200,000 more than what she paid, only $100,000 of that $200,000 is taxable. Okay, again, if you want more detail, click the link. The 2024 budget would increase the inclusion rate from 50%, right, to what it was, to 60% on capital gains above $250,000. Okay, for the first $250,000, nothing changes. Still 50% of the gain is taxable. So if you're not making capital gains above $250,000, nothing changes. I'm not saying that's a good thing, but if you have capital gains above $250,000, you're going to feel it big time. You're going to feel it big time because every dollar above $250,000, now you'll have to pay taxes on 66% of that income. I'm going to show you an example below of how that's calculated according to the Canadian government. You know who this hurts the most? Just regular people who have, let's say, give me an example. Let's say Mary and Joe bought a cottage in anywhere in Northern Ontario 10 years ago. They paid $500,000 and because the government printed all kinds of money, inflated our currency, and now the value of that property is at $1.5 million. You know, these people have made a capital gain of $1 million. And it's not even their fault. All they did was buy a cottage and enjoy it. Are they bad people? Why punish them? Why punish business owners who are creating housing? It's so crazy. We have a housing crisis, and you want to punish the people who are creating the most housing. Doesn't make any sense. Anyway, okay, now, here's I think the worst part of all. The budget proposes to tax all capital gains earned by corporations and trusts at the 6% tax rate. Absolutely insane. This man is a fool, but let's figure out how this actually hurts and what we're going to do about it. Now, what does this mean for property sales? And I pulled this example right off the CRA website on purpose. Okay, so in this example, written by the government, an Ontario resident has a $400,000 salary, so they're in the highest tax bracket already, and they have a capital gain of $300,000. Normally, they have a $300,000 gain. They keep $150,000. $150,000 is taxable because they have a high salary. Of that $150,000, they're going to pay just more than half of that is going to go to taxes. So maybe $80,000 of this $150,000 is going to go toward taxes. They're going to keep $150,000 plus the $70,000 that remains, and they're going to pay a healthy amount of tax. In this case, more of another $8,300 is going to be affected by tax because of the anything over $250,000 is going to be a 66% inclusion rate. So, you know, if this person made a $300,000 capital gain, the first $250,000 is still 50-50. 50% of the gain is taxable. But the $50,000 above $250,000, 66% of it is going to be included in tax. So they end up having a higher visibility, a higher exposure, really, to the tax rate at 66%. So they're going to pay probably another 6,000 or so in taxes versus this scenario. So it doesn't make a big deal. Is it going to make or break this person? Probably not. But over the span, you're punishing really the middle class and business owners who don't get to take advantage don't get to take advantage of the first 250 being included at 50%. It's insane. How this helps anyone, I have no idea. But the 2024 budget maintains the existing exemption for capital gains from selling a personal residence. We talked about that. It also retains an existing lifetime capital gains exemption on the sale of small business shares. So this is a positive. This is a positive. If you're selling a bunch of properties, especially if it's multifamily, pay attention here. You have the choice of selling the properties themselves, taking the asset and selling them. If they're wrapped into a corporation, you can simply sell the shares of the corporation. This is totally legal and avoid a lot of tax and a lot of pain by doing that. So this is a serious thing. It can be done. I know people who do it. It's more difficult to do, but if you can find a way, there is an opportunity here to actually save a ton of money in tax. Okay, this is the opportunity that I'm talking about. Don't poo-poo this. Okay, this is real, and even though it's hard, it has a pot of gold at the end of the rainbow. Okay, the new budget proposes to increase that exemption to 1.25 million and to index that figure to inflation. So the first 1.25 million, on the sale of business shares or farming or fishing type property, okay, has a capital gains exemption. So that is something that's good, that's positive, that's coming out of here if you're selling your business. Again, if you want more detail on the capital gains, like very, very, very deep detail, click the link in this video to see the deeper dive.